Hi, this is Yahoo. I'm macro option trader. It's August 16, 2025, 9:16 a.m. here in Japan. Today, I want to do a quick market review and share some thinking on where things stand right now. Let's start with the US market. The S&P closed at 6450 yesterday, down about 0.29%, not exactly weak. But compared to Japanese momentum, it doesn't feel quite as strong. Japan's clearly taking the lead at the momentum. The volatility in the US is still low, around 40 to 15, uh, so the tone there is still bullish. The move index has dropped to 76.6, showing how calm things have gotten. From a equity perspective, this is very bright phase. Over in commodities, gold is sitting at $3,335. Momentum is cooled off, and it's not looking as strong as equities. Bitcoin topped 120000 recently, but has also eased back, and some of that might be tied to comment from Mr. Benson about not adding more coins. As I mentioned before, Bitcoin at this level looks like a bubble similar to the COVID shock era. From a timing standpoint, pushing much higher from here seems tough. In fact, we are seeing money flow out of gold and Bitcoin and into equities. Another sign of stretch in stocks. On the political side, we had the Trump-Putin meeting in Alaska, which reportedly went well. Added to that, the prospect of the rate cuts, and you got a market that feeling very optimistic. Even the Nikkei Shimbun is taking about the post-COVID start buying phase. Yesterday, the Nikkei hit about 43500 yen, but it's staring just below 44000 yen. If the BOJ cut rates, we could see PL expand from the usual 18x to 2020x or even 25x, something worth watching. Japanese stock remains strong, and growth stocks are finally starting to move after a long quiet period. That tell me interest in Japan is rising overall. And yesterday, positive IMF indicator from the Cabinet Office could be adding to that. Now, on to something I've been thinking about. The Trump tariff one things, but there's also the issue of jobs. Large scale unemployment is being cut back, replaced by AI, and unemployment will likely rise. Tariff put dollars back into the US, pushing the world toward a deflation. Consumption slow, which is negative for corporate earnings. The counterweight here is the central bank rate cut, and while job losses will be painful, corporate profit could actually improve, which might lead to corporate tax hike down the road. Another form of dollar withdrawal, another deflationary push. Right now, stocks are still moving with inflation or currency debasement logic, so there's a gap between the market and the real economy. Time lag means you can have falling consumption and rising stock price at the same time. The Ukrainian loss situation could also shift positively after the Alaska meeting, which might ease cost push inflation that combined with monetary easing could support consumption even in a deflationary environment, making a case for a continued stock strength. Here's the thing, I think people aren't reacting much to news about tariff or unemployment because asset prices are high. When stocks and real estate are high, people feel they can always cash out if needed. But if the asset price cushion disappears for more than a decade, a high asset price have been the foundation for relationship plans and even political stability. That's worth keeping in mind because if that foundation cracks, the picture changes fast. So let's keep watching with that in mind. That's it for today. Following alongside, think of it like rowing along, but and I'll see you tomorrow. Thank you.